Now that the moratorium period is over, borrowers are looking at the other options to help them manage their EMIs, which of course are coming up for payment. And that's the reason why the RBI introduced the loan restructuring framework, based on which individual banks are coming out with policies to restructure individual loans. So if you have a home loan, a car loan, even a consumer durable loan or a credit card loan, you can approach your bank and ask them to restructure it. But every bank, of course, is responsible for framing their own policy. Who is eligible for this restructuring? What will be the terms? What will be the costs as well? All of this has to be framed individually by each bank. And now these banks have released their policies, or at least some of the major banks have. So State Bank of India, HDFC Bank, ICICI Bank, RBL Bank have all released their policies that are available on their websites. Largely, the nitty-gritties do seem to be pretty similar. Firstly, when it comes to eligibility, they are talking about the fact that it needs to be a standard account, which means you should have been properly servicing, all your debt obligations at least as on the 1st of March. And even if there was a default, it shouldn't have been more than 30 days. So speaking in banking parlance, you should have been what we call as a standard account. The recast options, one of the most commonly explained recast option is that you can get another, period of an EMI holiday, but that is not allowed to exceed 24 months, because that's what the RBI as well has allowed these banks, that look, you can give them an RBI holiday, but make sure that the overall tenure of the loan does not exceed more than 24 months. In documentation as well, some banks, of course, are a bit more tedious when it comes to documentation, but ordinarily what they do like to see is your salary slip, especially prior to March 2020, your bank statements, again prior to March 2020, because they essentially want to establish that have you really faced trouble, because of COVID-19. Also, if you've lost your job, so they would want some sort of discharge letter from your employer. And of course, if you are a small-time businessman, then again, maybe your P&L and your cash flow statements indicating that, look, your business has been disrupted. What really also stands out is the fact that an ICICI bank does want you to give out an unemployment declaration, and for that matter, even the State Bank of India wants you to declare your income. So it could be a salary declaration or an income declaration after the period of your restructuring is over. And then finally, the most important bit is with respect to additional cost. All of them will be charging you an additional percentage point over the normal interest. They have not specified how much will be the amount. Only State Bank of India has said that, look, I will be charging you 0.35% over and above your additional interest. So let's put forward a case study. Let's say that I had a 10 lakh rupee loan outstanding, and the outstanding tenure was roughly about 24 months. And I tell my bank that, look, I need an EMI holiday. I still will not be able to pay my EMIs for, let's say, 6 months. So yes, you will be granted that 6-month EMI moratorium. Then after the restructuring, firstly, that 0.35%, it could be more as well, will be added. So instead of 15% what you were paying prior to restructuring, now you will have to pay maybe 15.35 or 15.5%. And not just that, obviously the period of your loan as well gets extended. So you will be paying higher EMI, or rather higher interest, and you will have to pay it for longer. And hence you need to understand that whenever you opt for any sort of leniency from the bank, there is going to entail, or it will entail, a cost to you. So as far as possible, try not to go for loan recast. And even if you have no option, aim for faster repayment of the accumulated debt to the extent possible. Decide the moratorium tenure based on when you expect your incomes to normalize. So if you believe incomes can normalize in 7 months, there's really no need to go beyond 7 months. And finally, of course, if incomes stabilize earlier, then go ahead and make the payments to your bank.